the federal government just released the Q1 data for 2026, and the Nashville-Franklin-Murfreesboro Metropolitan Statistical Area, big mouthful, we actually gained 1.8% in Q1 in home prices. That's actually nearly 4 times the national rate. Also, what happened this week in Rutherford County and Murfreesboro real estate, showing activity continued to pull back after Memorial Day. There was no bounce, and that's certainly something that's worth paying attention to. And number 3, new listings are down 21% from this time last year. And that's actually probably the number one thing that's kind of holding this market and those values up is the new listings not entering the market at the particular pace that they have been doing in years past. So I'm John Turner. I'm the team lead of the Turner Victory team with Onward Real Estate. I'm here with your Murfreesboro Real Estate Report, where we talk all things real estate, not only with Murfreesboro, but all of Rutherford County. That would include Smyrna, Vergne, Eagleville, and all places in between. And we've got some really good data for you. Those first 3 things I gave you are the 3 things you need to know about the market. But we've got a lot more to get into and a lot of different stats to get into as well. So let's go ahead and look at our month supply. As a matter of fact, let's start on the weekly chart first. Let me switch over to this chart, and here's what we've got. For the week ending May 30th, 2026, the Turner Victory Team health score is at a 51. So basically means we're at a balanced market. And this is all across the market. There's different, as you know, different price points are at different points in the market actually. But there are 1,527 homes available. This is a 3.56 month supply. Whenever you break it down by price range, you can see anything below $300,000 has a 2.21 month supply. Anything below $400,000 it's at 2.3. It's in the green, 2.3 month supply as well. So very active market there, especially if you're a seller in those markets below $400,000. You are getting, should be getting some activity on your homes. If you're a buyer in those price points, you're probably facing some competition. Obviously, as we go up, once we hit the 500,000 mark, you can see that things slow down considerably. We are at 5 month supply, or close to 5 month supply, anywhere from 500,000 up to $1 million, and then over $1 million. Obviously, that market is much slower. Right now, the $1 million to $1.5 million, we have over 7 month supply of inventory. What does that look like on our charts this week? Let's hit a couple of things. I've got a couple of notes here as well. First of all, active inventory. You can see our active inventory did go up this week. It peaked out this week at 1,527 homes, which is a little bit higher than what we had this time last year. But that is something that it's been an ongoing trend, which is really interesting. Create a couple of interesting dynamics. First of all, our month supply, we've been just wavering right here around 3.5, a little bit above, a little bit below. We've actually come down from the 3.66 month supply that we had about 4 or 5 weeks ago. And a lot of this has to do with what I was talking about earlier about fewer listings coming on the market. If you look at the orange right here, this definitely shows it. Let me pull off 2024. And if you look at the 2025 numbers, it's the same thing every week. We have been trailing new listings, and not new construction, just new homes coming on the market. We have been trailing that for months now. So that has kept our inventory from growing even more. And as you may know, as our inventory grows, it puts downward pressure on prices. If inventory tightens, it puts upward pressure on prices. Well, right now, with the new listings not coming on at the same velocity that they have in the past, what we're seeing is as we saw the month supply leveling off a little bit. We're not seeing a extreme growth in inventory. So for sellers, what this means is it helps hold your prices. As I talked about earlier, there was a 1.8% increase in quarter number one on prices across the board. And that's not just Murfreesboro, that's the whole Nashville metropolitan area. But for buyers, what's going on is, if you've been waiting on that crash, it certainly hasn't happened, and it's not showing signs that it's going to happen, but we have seen prices moderate. Traditionally in our area, prices go up somewhere between 4.5%-5% a year. We know we had a few years where we had way into the double digits of that, but we are back now at a growth that is slower than what is traditional. So hopefully that's given wages every month a little bit more of a chance to catch up and make homes a little bit more affordable. Our new pendings as well, where we compare it, the orange to the blue or the orange to the green, we are ahead of last year, but just barely, 114 to 112. So basically, we pended about the same amount that we pended this time last year. We are still tracking above 2025 numbers on pendings despite the slowdown at Memorial Day. Let's look at that real quick as far as the showings go. It's a trend we talked about last week. Sorry, I'm scrolling through so much of this here. But we talked a little bit about this last week about showings and how we had seen where they had peaked 4 weeks ago and they had slowed down. And we knew last week was because of Memorial Day, but historically we see a little bit of a bounce back. But this week we did not. We actually saw a drop. So this is what we call a leading indicator. We've got now 5 weeks of data that is showing us that we may have peaked on our showings. The one caveat I will give you is the mortgage rates. Look at mortgage rates just real quick. They did tick up just a little bit this past week, up to 6.53 versus 6.51 last week. So they did tick up, but not much. But we are in a market that is very mortgage rate sensitive. So depending on what happens in the Middle East and with inflation and different things of that nature, showings could pick up again. But right now, the trend is that they are slowing down. So what does that mean? Well, if you're a seller, that means that you probably are not getting near the showings that you want to have. You can look at the price points here. Anything under $300,000 still getting a lot of showings. You would expect that in this market. Between $300,000 and $400,000, you're getting about 4 showings on average. You may be getting more, you may be getting less, but that's the average. But anything above $400,000, we're just not seeing the showings. We're not getting a live activity. So that is something to keep in mind. If you're a buyer and you're in those higher price points, less competition. If you're a seller, you have a lot of competition trying to sell your home. With that said, 30% of all homes have sold in the first 7 days in Rutherford County. That's 30% of all homes have sold. But nearly 20% take over 90 days. And quite frankly, once you hit that 90-day mark, and we've talked about this a lot, once you hit that 90-day mark on the market, there's 61% of the homes that hit that 90-day market do not sell, or they don't sell under that listing anyway. So keep that in mind. And if they do sell, they're only selling for about 93% of their original asking price. So there is definitely a cost to being on the market and being on the market a long time. We were talking to a seller earlier today, and they said, well, we can always come down, can't we? We can always come down. Yes, you can always come down. As a seller, you can always come down. But the stats show, and we've been tracking it, that if you do not price correctly from the start, it's going to take a lot longer to sell, and quite frankly, you're going to net out less money than if you would have started at the correct price from the very start. All right, let's get into the fourth quarter appreciation. If you look across this map, you can see where homes are appreciating and where they're depreciating. The red means they're going negative, and the deeper the red, the deeper the negative. So if you look here, Austin, we've known that Austin has had, they spiked so much a few years ago, they've been getting hit really hard. Colorado's getting hit a little bit. We have some pockets over here. Memphis, the whole Memphis area is in the red right now. And then a lot of Florida is, especially the parts that got really hit really hard by some of the hurricanes. Tennessee, though, except for Memphis, is all blue. East Tennessee, Knoxville area, is actually appreciating quite a bit. We've seen a lot of growth over there. Tennessee across the board. In the first quarter, we saw a 1.4% appreciation, and over the past 4 quarters, or so basically the past year, we saw 2.2% appreciation. Now, I will remind you, this is for quarter 1. We're getting close to the end of quarter 2. It just takes the federal government a little time to get all this data out to us. But for the Nashville-Murfreesboro-Franklin MSA, quarter 1 appreciation was 1.8%. That gives us a 4-quarter appreciation of 1%. If you recall, at the end of the year, we actually, for the previous 4 quarters, had lost about 0.8% in value. So we have actually seen that increase. What does that do to us on the national stage? Nationally, Elgin, Illinois appreciated at 10.8% year over year. So they are actually seeing a lot of appreciation. The San Francisco area appreciated quite a bit. We are over here, the Nashville-Davidson, we're at 54. So we are one of the 67 metros that actually appreciated. And this just kind of shows you where we rank. So we're not, basically we're flat. We are staying flat. It's good for buyers. This helps them with affordability. Sellers, if you bought pre-2023, you're probably in a decent place with your equity, okay? Probably. Especially if you bought way before 2023 and you haven't refinanced, or whenever I say refinance, pulled money out of the house. But I will tell you, we are starting to see a certain segment that bought within the past 2 or 3 years, and they're having to turn around and sell for whatever reason. Some people just want to move up in house. Some people, job transfers, life happens, divorce, different things, and they have to sell. And it's those people right now that are, you're in a little tough spot because your home has not appreciated. You've basically remained flat over the past 2 or 3 years. So from that standpoint, it is possible, depending on how much money you put down and things of that nature, that you may have to bring money to closing to sell your house. And we have not seen those situations since the Great Recession, by the way. And I'm glad we haven't seen them. It's not any fun telling a seller that they're going to have to bring money to closing in order to sell their house. So, all right. So I want to come back to the 3 things we started out with first. First of all, the federal data confirms that our area is appreciating, and we're actually appreciating more than a lot of places in the country, but it's a slow appreciation. The second thing is that showings did not bounce back after Memorial Day. We'll continue to watch that, but if you're a seller, this is a leading indicator. There's not as many people out there looking, probably because the mortgage rates have impacted them a little bit. But just know that you've got to get a little bit more aggressive. Buyers, means you have a little bit less competition right now. Even though pendings are up, there's not as many buyers out there right now. And then new listings, they're down 21% year over year. And we keep seeing that every week. We keep seeing new listings being down. Again, this is keeping us from flooding the market with inventory, which is helping stabilize prices. So if you're one of those people that you want to see prices go way down, you want to hope for a bunch of new listings out there. But right now, we're just not seeing that. If you're a seller below $400,000, the window's open. You can move with confidence. There's a real good chance that if you price it right, present it right, position it right, and promote it right, you're going to get it sold. But if you're a seller above $500,000, you've got a lot of competition. You really need to look at where you're priced and how you're presenting your house because, again, you've got a lot of competition. There's a lot of other homes out there in the same situation you are. Buyers, just know that we're kind of in a two-part market, really. If you're looking below $400,000, you better act quickly. That house probably will not be around. But if you're looking above $500,000, you have more choices now than you've had in quite a while. So you can go out and move with confidence. You've got some negotiating room, and certainly should help you get a decent deal on a house. With that said, even the homes in those price ranges that are that meet all the criteria as far as the price, promotion, positioning, and presentation, they're still moving fairly quickly too. So you could have competition at that price point if something just hit the market, but it's less likely than what it has been in a few weeks. I hope you enjoy this information. We always ask you to make sure to subscribe down below so you don't miss any of this. And also comment down below if there's any other information you want us to bring to you. We enjoy looking at this. We enjoy helping you out and educating you. We also enjoy using it for our clients to help educate them. So it will help them walk through the market and help them make confident real estate decisions. I am John Turner. I am the team lead of the Turner Victory team at Onward Real Estate, and we certainly appreciate you checking us out this week and hope to see you next week. But until then, I hope you make it a great week. Thank you for tuning in.